Why are you losing money in stock market? And 3 steps to check before entering stock market. Hi, hello, this is Ganesan, your millionaire coach and author of the book Money Leaks. And today you're going to see a very interesting topic considering the market situation right now. Why are you losing money in stock market? And this is the question of so many retail people because they lose money and you may be one of them. So then this video is for you. And if you don't want to lose money, what is that 3 steps you need to check so that you are not going to lose big amount of money, right? So please stay tuned, and people who are watching live, thanks for watching, and if you're watching a recorded version, thanks for you too, and request you to share this video with your friends and relatives so that they also know why are they losing money in stock market, right? So because I just want to make sure or promise even that it's not a gambling market. Many think that stock market is a gambling market and they doesn't even enter. And one step which government has taken this in this budget is that they want to reduce the promoter holding from 75% to 65%. Or it's almost like 10% of the promoter holding is diluted so that many will participate in the equity, right? So this is one step which makes sure people participate in equities, and many still think stock market is a gambling one. This is what we are going to address today, and stay tuned. And because I even had a discussion with one of the broker who is in the market for more than 30 years. It is 30 years of experience. I'm happy to have a discussion with him today morning. So I thought, let me do this introduction on why people are losing money and what is the 3 step you need to do. And first step is that is what he had shared. Before checking that step, if you're entering in stock market, you will be a loser. This is his story, and I just want to share what has happened because it's more than 30 years old, and he has been associated with them for a considerable number of years, and they have been making good amount of money in stock market. And the time I'm saying is like you need to write down the chart. You need to look at the charts, and you need to write down in the paper and then submit in the exchange so that it's physical form. It's not demat as it is happening nowadays. It's easy. We just log into a website in mobile or a website and laptop, and then we buy stocks, right? In those days, what I'm saying is before 90s, you need to sit down in front of TVs or in exchange and then look at price chart, and then you need to write down the physical form and then submit it in exchange so that units are allocated. Even then trading was going on intraday, and so much was there even that time. My friend's client, he was a very rich guy. At that time, his money is worth around 100 crores. That's what he had told me. So think about almost 25 years back, 100 crores of money, and what would have been now? Very modest returns of just 8%. Putting it in FD, even considering I'm very low, 8%, it would have been more than 6 times in absolute terms. It would have been more than 600 crores by now, just putting it in FD. But what he had done with my friend, the client with my friend was just making small amount of money, and he just wants to sit in front of the trading room, and he wants to see how much the chart is going on and going down and suggest. But my friend has a very strict rules that he doesn't allow clients in front of TV so that they doesn't get emotional and they doesn't control over the trading session, because he knows much lot, because his father was in the stock market and doing all these things, and he was also there, and their routine is that they doesn't allow people inside the trading room even now, but he has got good client base. So what has happened is that he doesn't allow, and one of the client's other friend, he told, if this guy is not allowing, let us go and do in our place. So it's that is what he did, and he just went away. So my friend has warned his client that you need to take an informed decision. Don't take emotional decisions and lose your money. And he had 5 kids at that time, and they are filthy rich. Consider 100 crores in 90s, you can think of, right? So what happened within 2 to 3 years, he had lost entire money. If you are able to interact with any of the stockbrokers for more than 20-30 years, they will say you the story. So this is one such story where he had lost 100 crores of amount. I thought he would have invested in futures and options. I thought as he invested in futures at the time, he said no, it's an intraday trading, so you're losing anything. If you are losing everything, entire amount, and you will not be able to check entire volatility, and that is also one of the reason. And my friend's client, he doesn't know how to, maybe he doesn't know how to check, and he lost everything. And after a while, his family had approached my friend and asked, why did you do this, all these things? Then he told he had went away from me for the last 2-3 years, and he has lost everything. From 100 crores, zero. So nothing is available right now. So this is how you will end up if you are not following a strategy or 3-step process while coming into the stock market. Can we see that? And one more interesting story just now, which has happened in the last 10 years and even now. I had shared this story. So my friend was this is another friend I'm saying. He was a CA, and he was damn sure that he can make money in stock market because he was having debts worth more than say 10 lakhs, close to 10 lakhs, and he wants to close it out at the earliest. And suddenly he participated in one of the stock market session. He got energetic, and he wants to make money. The only mistake what he did is borrowing money and investing in stock market, and trading, not investing, trading in stock market. He borrowed his money, and it's almost like his initial savings, whatever he had borrowed, and then he took credit card, that also got lost, and then personal loan. And within a month's time in futures and options, he ended up having loans worth, you won't be able to guess also, loans worth almost 60 lakhs, close to 60 lakhs. From nowhere, he wants to close debts worth 10 lakhs. He ended up having debts worth 60 lakhs. This is also one mistake people do, and this is the biggest lesson he would have learned in stock market. That's what I thought. But recently, before 3 months before the election, even before analyzing, he just jumped in using his client's money, and he said that you can make huge amount of money just putting your money in stock market. He borrowed 20 lakhs on behalf of his client. He started investing. Within the space of 20 days, from 18 lakhs, it ended up in 1 lakh. What he did is he wanted to average his money, and that was a time global market condition was down, and local election was bit it's not stable, and from 20 lakhs it came down crashing to 1 lakh. Just think of. And he was like, it's a hard lesson learned second time in 10 years, that too with other person's money, right? So these are the lessons which you should never forget while coming into stock market. And what I want to say is, all these fears, these stories will create fear in you, and consider these 3-step process to move away the fear and have faith before coming into the stock market. Step number 1. Yes, are you with me? Step number 1, you should know whether you are a trader or investor. The main difference is that trader is what the second story has happened. Like, he wanted to invest through trade through futures and options, which is a very high risk proposition. Without knowledge, or even with knowledge, the possibility of making money is very, very less. So if you're a retail investor, consider investing. Investing means being there for a long term, 3 to 6 months, or even for a year. If you're able to be there, then if you're able to take a delivery, if you're able to have the stock, a single share or even a 10 shares for a day, then you are an investor, right? So think about whether you are an investor or trader before coming into the stock market, right? This is step number 2. And step number 2, this is step number 1. Let's go into the step number 2, which is nothing but, when should I exit, or when should I book profit? I had experienced this so many times. I'll enter into the stock, I'll buy the stock, and it would have given me 25% profit, and I will wait for a long time, thinking, let me wait for a very long time so that I can create wealth. So what I felt is that entire portfolio I shouldn't hold for a very long time. There should be a part of your portfolio which you should hold for a long time so that it creates wealth, and there are part of your portfolio which you can trade for a 6 months period, 3 months period, or even for a year, so that you have an exit strategy. Say you are buying a stock at 100 rupees, and you should exit when it is coming nearby 125, 120 to 125 range, so that you easily make 20% profit, so that you have money over a period of time. So right, so this is step number 2. What is when should I come out of the stock market? And the step number 3, how much risk I can take. So sometimes timing may be the wrong, timing may be go wrong. You want to enter it as an undervalued stock, but still, due to the macroeconomic condition or local industrial regulations, the stock would have come down by 5%, 10%. You should have done the fundamental analysis, and after doing that, if you are entering, how much risk you can okay to take. Sometimes you would have entered at the right time and the market condition was very bad, and the stock would have corrected by 15%. If you're not sure how much I should have a stop loss, say you're buying a stock at 100 rupees, you should be able to have a risk value like I can hold on to the stock till it reaches 90 or till it reaches 80. So this is like 20% correction or 15% correction, have it in you, and then if you're okay, you can just buy some more stocks and hold on to it, again analyzing the fundamental things, or else you should book your losses. You had bought something for 100 rupees, exit at 80 rupees, you end up just with 20 rupees loss, or else the stocks will keep on moving and you end up losing your entire money or more than 50 rupees. So right, so this is something which you should consider. These are the 3 steps. Step number 1, are you a trader or investor, and when should I exit, or when should I book my profit? And the step number 3, how much risk I can take, which you should be clear before entering into the stock market. If you follow these 3 steps, at least you will have a confidence that okay, I am entering at this level and I can book profit, or I can have a stop loss before, so that you're not losing your entire money, right? So these are the steps which you should follow. And if someone says I lost my entire money, I believed in someone and I invested, these are stories which will because you are not owning up, it's your money, you should be clear. Even if there is a recommendation given by your broker or someone based on tips, analyze yourself whether that stock is good for you, whether the stock is the stock, right? So if it's a Tata Consultancy Services, it's an IT company. You should know whether the company is in the market for a very long time. Most of the retailers lose money just because they want to test the market. They will invest 5,000 or 10,000 in a small cap stock or penny stock. If you know that there are stocks which is at very few paisas, 50 paise, and even less than that, even 1 rupee. So people think I can buy 1 rupee and sell it at 2 rupees. It's a huge profit, but the thing is, it won't move from 1 rupee to 2 rupee in a very short span. It takes a lots of time, and it's a penny stock. Generally, traders used to do cartling, like they do something so that retailers buy those stocks and lose their money. So don't lose money, even if it is a 5,000 rupees. Put it in a known company. Known companies like IT and consumer goods, like the soaps you use, the Gillette, the shaving cream, or the soaps ITC, the cigarette company, or whatever. All these consumer companies, ITC has biscuits and so many things. In Hindustan Unilever, and these are the companies which is there in the market for a very long time. And Infosys, ITC, TCS, Wipro, all these are there in the market for a very long time, so that you can believe that. Consider all these stocks and think, instead of buying the penny stock, buy these known stocks.